I think being willing to say, I'm embarrassed, but I don't know what that means. Can you explain what you mean? So you can fix for the next time. Otherwise, you're never going to learn and make that progress. I think that's so important.
One of the biggest differences between us as venture capital investors as opposed to other kinds of investors like in PE is we're really investing in the individual and in the team.
There are two types of decks, at least you should really be prepared to have. One of the decks is a deck you send. There will be more language, there will be more information on a deck that you send. And one is a deck you present. And that should be a lot more Spartan with a lot more pictures because you're going to be speaking and narrating that.
Thank you for joining, everybody. You are watching the Venture Capital Show with Andrew Bott, and I'm Andrew Bott. This week on the show, we have some great guests who are experts in the venture capital world, experienced and ready to share their learning experiences with you to help you with your current fundraise. We have Matthew Saunders. He's a partner at Fastbreak Ventures. We have Renee Nimi. She's a partner at Mighty Capital VC. We have Davin Nijran Tawar. He's an investment associate at Rev Venture Partners. And we have Oren Eloni Sharas. He's the CEO and managing partner at the Global Health Impact Fund. So we have some incredible guests this week. I hope you enjoy the show. As always, we're based on Roomkey in the metaverse. Welcome, everybody, to this week's Venture Capital Show with Andrew Bott, and I'm Andrew Bott. I have a great panel of active VCs tonight, who some of whom I've met before, and some of whom I haven't. So this will be a great opportunity to get to know them. And I think to start off, what I would love is to kind of do intros. Starting with Matt to my left, and hear about your experiences as a VC and maybe a little bit about your fund. Matt, welcome.
Great. Thanks for having me, Andrew. So Fastbreak Ventures is a seed stage fund. We focus predominantly on enterprise software. We're based in Toronto, so we invest across Canada and have done a few deals in the US as well. So we like to be the first money in and help companies with market validation, customer acquisition. And we also have a fund in Singapore where we invest in Southeast Asia under the same thesis mandate.
Renee with Mighty Capital. We're an early growth stage VC. We invest primarily in companies that have proven early market traction, and we help them scale. The sectors we like very much are B2B, SaaS. We do some life sciences, but all in the U.S.
Thank you so much, Renee. Davin, all you.
Great, thanks, Andrew. So, hi, everyone. My name is Davin Nijran Talwar. I'm an investor at REV Venture Partners. We're a single LP fund, which means we've got just one investor, which is a FTSE 100 listed company called RELX. We're a globally active fund, usually investing at Series B onwards. And we typically invest in B2B SaaS companies which have a strong data and analytics element to them. REV's been around for around 20 years now, but I've been a part of the fund for the past 3 years, previously coming from a strategy consulting background. But my role here at REV is to essentially find the most exciting small to medium companies, offer them good capital, and hopefully help them grow into the most exciting giant companies.
Thank you so much, Davin and Oren.
Andrew, thanks for having me today. My name is Oren Eloni Charis. I am the managing partner of the Global Health Impact Fund. We are a fund that was founded by doctors and run by doctors. I'm an anesthesiologist with over 2 decades of practice. And what we do is we invest in early stage healthcare companies, typically at the intersection between digital and medicine. So a real technological bend to our investments. And our goal and our passion is to really transform medicine for the future to make everybody healthier and live longer.
To start things off, I would just love to hear if you all experienced anything this week where you thought, gosh, I really wish that founders knew blank, or I can't believe they did this with their pitch deck, or maybe in a pitch or in a conversation like, "Gosh, I can't believe they said that." Keep in mind the folks in the audience are looking to learn from you. So, is there anything that stood out in your week this week or last week, where you thought one of those things?
So again, Mighty Capital, we invest primarily in SaaS startups, and usually it's Series A. And I had a company. It was actually in a partner meeting, so this was a second phase pitch, and we were going over metrics, and he had his salesperson in there, and when I was quizzing about CAC, customer acquisition costs, I was getting his marketing spend, and I was spinning around and around and around on it, and finally had to give up. But I think the learning there is just, especially when you're in a SaaS startup, you really need to understand your metrics. And, not just your spend, but the actual efficiency of your spend.
That's absolutely true. Renee, I was going to approach it a little bit differently, that question, because I think it's a really interesting question. I like to think about the startup VC dance as sort of a dating dance or mating dance, and you can't just get started with the I love you. You have to build to it. And I find sometimes, and I was reading a deck just yesterday or the day before, and it's like everything, they just put everything they could into this deck. It was chock full of information. I was spending 5 minutes on each slide reading it. So I wanted to give it my time, but I just came away thinking, I know everything I need to know, and I don't really care anymore, and we're never going to talk again. And so really think about the you want to woo somebody, whether it's an investor, whether it's a client, anybody, right? You want to get them excited, but you don't want to give everything away right up front, because then there's no game. I don't know. I don't mean to trivialize it, but you know what I mean?
I love both of these topics. I want to unpack both of these. I think, and it looks like everyone agrees. Everyone's like, "Oh shoot, which topic do we discuss now?" So for the first one, for what Renee was talking about, Renee, would you do a favor and just tell the room what is CAC and what was the mistake that they were making? Because not everyone might have caught that.
Sure. So CAC is customer acquisition costs. And especially when you're running a B2B SaaS business, one of the things that we look at in the early stage is how much is it costing you to actually acquire a new customer. And so, things that will go into CAC include your marketing spend. It'll, include any investment you have to spend in actually sales, and all of those expenses. And so, it's a fairly simple metric. So you take, your expenses and your costs, and you divide it by the number of customers you acquire, and that becomes your CAC. Now, in the early stage, CAC isn't going to be something that but especially for us, we're looking for that early growth and repeatability of the metrics. So knowing not just what your customer acquisition cost is, but actually the trend. And for those of you who don't know, the trend should go down, not up. But yeah, so that's what customer acquisition cost is, CAC.
When a potential investor is saying, yes, but I want to understand something, you should try to understand what they're looking for rather than, sort of giving them back what you think they're asking. Because Renee's not going to keep saying, but what about the CAC? What about the CAC? And you're like, well, in the marketing, there's clearly a disconnect, and you should try and understand that. What happens is that it undermines the view of the VC of your understanding of your business. And of course, if we ultimately walk away from the table thinking you don't get it, then we can't invest in you.
Yeah, it's an interesting point which Renee raised about metrics
as a whole there, because I think from an outsider, it can sometimes look like VCs have their own special language when it comes to talking about finance, particularly with B2B SaaS companies, where a lot of the metrics we track will be things like ARR or CAC, or things which you won't typically see on your usual financial statements. So actually having them in hand when you are coming into a meeting with a VC and knowing what those metrics are, knowing how they work, knowing how they apply to your company really does help us to understand that company and ultimately help us to value the company as well, because those are the metrics we'll be taking into account.
I think in addition to that, obviously knowing your numbers, but we deal with earlier stage companies, and it's okay if you don't have certain metrics because you're too early or it's a new product that you just launched or whatever it may be. So just be honest.
I think being willing to say, I'm embarrassed, but I don't know what that means. Can you explain what you mean? So you can fix for the next time. Otherwise, you're never going to learn and make that progress. I think that's so important. Should we jump into Oren's topic about long decks and how we can shorten those and make those efficient? Let's dive in. So because I see this a lot. A lot. Very, very, very long or very detailed pitch decks where it's just way too far, and it kind of shows they haven't spent the time to really filter down and condense something into a clear statements when they cram it full with so much information. What are the mistakes you guys see around this, and what are some potential ways to solve this as a founder?
I think that early on you want to have a 12 to 15 slide deck that really covers what you're doing, get the people excited about it, show some traction, show the competition, show the team, a little bit about the numbers and where you're going and how you're growing, some capital needs. And then after that, you can just build an appendix with lots of information that will answer all the other questions that we'll have. But early on, you're just trying to get us excited.
It's a bit of a nuance. And I know for time reasons, a lot of you just want to have, one deck just packed full of all the information and just give the same deck out every single time. But the reality is that that's not what we're looking for. We're looking for, very specific metrics. And if you actually do your homework, most VCs will let you know what those key items that they're looking for, and focus on those first. Make sure you get those key questions answered, and then the Q&A will vet out most of the rest of the information. But this isn't just about the business. I mean, one of the number one things that we look for is the team and how you show up in that pitch meeting. And your ability to handle the nuance and the questions is critical, is absolutely critical.
Yeah, I think if we look at what the purpose of the deck is as well, I mean, the purpose of the deck isn't going to mean we invest solely on the back of what's in the deck. There'll be a number of meetings involved. We'll be doing DD, due diligence as well. The purpose of the deck really is to grab our attention, to explain to us what the problem you've identified is, how you're trying to solve it, and who you are and why you think you can do it. And really, that's where it all comes down to. If you're going for much more than that, then it's a good indicator that maybe you're putting a bit too much in.
There are two types of decks, at least you should really be prepared to have. One of the decks is a deck you send. There will be more language, there will be more information on a deck that you send. And one is a deck you present. And that should be a lot more Spartan with a lot more pictures, because you're going to be speaking and narrating that deck. So when you give a conference, you might have a different approach or a pitch than when you send your deck out. My process is that I like to read decks before I talk to people. It educates me. It gives me a chance to already apply a filter. There are a number of reasons why I won't be interested in taking a call that have nothing to do with the company. For instance, my investment thesis, the amount of money they're looking for, their valuation, their stage, etc. And so I want a good deck that has information in it, but I also don't want to get really laden with the details. I want to get excited. And so all of these things we're telling are our how, but the why is you got to get us interested. You got to make us want to call, and that's the only thing that really matters, I think, in a deck, ultimately.
So tell me, guys. I know it depends on your stage, and it depends on your the company you're looking for. In general, if we generalize it, what kind of gets you guys really excited when you see a deck? Are there some common things, or is it just too artistic to boil down?
Yeah, for us, we're enterprise software, so we look for people that have industry experience, that have dealt with the problem they're now trying to solve, right? So they work for a business, realized a pain point in that business, have to go build a solution that they think can sell back into that market. Those are some, quick things that the team, they have the industry experience, they have the expertise, they know the problem really well. Then there's lots of still challenge and stuff, but those are some early ones that we get excited about.
What really excites me is seeing a tight business. When you see a company get presented saying, this is who we are, and this is what we do, and these are our customers, and this is our customer retention, et cetera. When you see somebody really gets it, and then they map a path towards greatness, and all they need is capital, that's actually really cool, because it feels like you can fit right in there as a VC and make a difference. It's sort of that idea that you already know you should invest by the time you've read the deck. Like, that feels really exciting.
I think there's an elegance to simplicity when it comes to that intro deck, where you literally just give them the pieces that they need to determine, is it a fit for my firm, and then is it a fit for timing, right? Some investors like seed stage, some are Series A, some are Series B, and the lines are fuzzy, but the key indicators for timing is really around traction, revenue, not just revenue, but revenue trajectory. If you've been around for 9 years and you have $2 million in revenue and you've grown 10% a year, is a very different story than if you've been around for 2 years and have $2 million in revenue. Making sure that you tell that clear, tight story so that we can screen properly, and then the relationship goes from there.
So when you say tell a story, what do you guys mean?
For me personally, there's two sides to this question. There's the company story, and then there's the individual story. And the company story is normally what a lot of people do tend to lead with, because that's what they think we're only interested in. And it is very important, because we do want to know how these people got here and why they think they're able to solve this particular problem. But it isn't the be all end. And actually, one of the biggest differences between us venture capital investors as opposed to other kinds of investors like in PE is we're really investing in the individual and in the team. And it's so important for us to be able to understand that as well, because ultimately it's not just an idea we're banking on, it's the ability of that team to be able to execute on that idea. So a story which is able to show why this particular entrepreneur has the expertise and the know-how to be able to execute on this idea and fill us with confidence. That's what essentially I'm looking for.
I like to see a narrative, why this is important. I agree that you want to tell the company story. How does this become a successful business? That's kind of, rote and dry, but it's really important, obviously. But what's really great, and the pitches that really, I think, hit it out of the park, are the ones that can bring some kind of an emotional component to it that make you want to go on the ride, that make you want to be a part of what's happening. And, in healthcare, of course, everybody in some way connects to healthcare. So that's where I invest. And hearing the story about the patient or about the experience or some personal story that connects the founder or one of the founders to this, particular thing, which is not uncommon, can really be valuable because it puts a human face on the problem they're solving. So I really like that, although, it's a little showmanship. The other thing I wanted to say is that storytelling is really important in general, not just for one call, because, if I'm the VC and I can pour through the minutia and find the one thing that's going to make me feel that you guys are the best ever, that's great. But I'm not the only person who's going to invest. And so part of what I'm doing when I'm interviewing you for an investment is interviewing your ability to get other people to invest in you. So at least in healthcare, we don't typically take a whole round. There are a lot of other investors. So your work doesn't finish with even me as a lead. So all of that stuff just becomes really relevant because once we invest, we're part of the team and we want to know that you can execute.
Yeah, I think in addition to that, not only are you selling us as investors, but you're ultimately the founders, assuming you're the founders that are pitching us, you're the ones that are going to be customer facing. Can you go sell this story to the customers? Can you go build the business? Can you, build a pipeline to acquire hundreds or thousands of customers, depending on what kind of business you have? That's important too. Like, if you have poor communication skills and struggle to get through the deck and have other issues, then obviously that's a huge red flag.
I would love to hear kind of your experiences and what you spend most of your time doing. What is the average day, or what is something that you spend a lot of your time on throughout your week?
We have to understand that our sole job isn't to go find new companies to invest in. We're also, most of us have a portfolio of companies that we're dealing with that are currently active. So a lot of our time goes to helping those companies continue to grow and scale, perhaps, introducing them to customers or introducing them to other investors as they grow and scale. Obviously, we spend a lot of time, sourcing, screening, seeking out deal flow. But in addition to that, there's also operational things we need to do. We have to raise funds every few years, so that takes a tremendous amount of time. So it's important for a founder, when they come to meet with us, they can ask questions about, where are you in the life cycle of your fund, right? If you're at the very tail end of it, and you're only making one or two more deals, that's different than you just launched, fund 2 or fund 3, and you're looking to make 20 investments over the next, 3-4 years. So you can ask those questions. Feel free to set the stage and ask, like, do due diligence on us if you wish.
Yeah, I'll add to that. I like that point, Matthew, that where they are in the life cycle. If I'm at the end of my cycle and I'm willing to make an investment, you better be sure I need that exit to have a reliable, that company to have a reliable exit in the short term, right? Otherwise, it creates a problem for me at the end of my fund. So, if you need 5 years for your exit, then you're definitely not a good candidate for that fund. Right now, we're just opening our second fund, so my time has been head down, putting all of the legal framework together for that and beginning my meetings to market my fund. So just like you as a startup, I have to be a startup for my second venture fund. Also, I spend a lot of time on panels like this and talking to startups, and of course managing my startups as well. So yeah, probably pretty much the same thing. The nice thing about the venture world, the way I see it, is that there are discrete jobs, fundraising, supporting, and sourcing.
Does somebody want to explain about fund lifecycle? Just, I think for folks who are new to a VC, they're not going to be able to latch on to this topic until they get a little more. So what does that mean, fund life cycle? What's early in the life cycle versus late in the life cycle?
Well, I could jump in. So sure, depending on the size of the fund and what stage you're investing in and how many deals you're going to do, your ballpark, you're going to invest a bulk of the money in, say, 3 to 4 years, maybe 5 at the outset, and then you're going to have some of that fund for follow-on investment. So you're going to make initial investments, you're going to make follow-on investments. So if you want to be in early to that fund, it's sort of that in that first 3 years, maybe 4 years at the outset. That's when they're making initial investments, and then they'll have some capital for some of the businesses that continue to do well and they want to do follow on. So if you're a really early stage or a company that's early in its life cycle and needs 4, 5, 6 years, as Oren said a few minutes ago, you're probably not going to get a check from a company that's at the tail end of their initial investments. So it's good to know that.
Perfect. How do people know that? So how do you find out kind of where a fund is on the life cycle without directly asking them? What's the easiest way?
There's no issue. Just directly ask them. I mean, if you can't find out through other channels, through when they made an announcement of fund 2 or fund 3 or whatever fund they're on, typically it's published somewhere. you can look up there. But if you can't, then feel free to ask the question.
I think this leads on to a really interesting point about how and why you should do some DD on your VC fund as well. And it shouldn't just be a one-way street of the VC evaluating the startup. The startup also needs to be evaluating the VC, understanding how they operate, and understanding if they are going to be the right partner for them going forward and the right partner to give them the capital. The last thing you want is to be locked up with a fund for the next 10 years, and maybe you don't have full alignment with them because you didn't ask the right kind of questions, or you didn't ask the direct questions early on. So in the early days, I don't think it's ever too early to start asking those direct questions.
Yeah, I mean, I agree with that. That's a really great point. Psychologically, and it's probably very juvenile, but it works. When people call me up and say, "Hey, and I've looked at your portfolio and I really like this and I really like that, and I think our company would be a good fit for that," there's something really smart about that approach, right? It feels personal. It feels a little more intimate and less cold. And so having a little bit of due diligence done before you take a call that you think is a good fit potentially for you, and using that information is really smart and effective.
Yeah, I actually think one of the most interesting questions I've been asked is, why did I invest in this company? Coming from a new entrepreneur talking about a company in our portfolio. And I think that's a great question because it shows the entrepreneur really trying to understand our thinking as a fund, what it is we look for, and really trying to get a feel for what are these guys all about. I think it really impressed me hearing that question.
I want to give an opportunity for the panelists, and I'm just like, fingers crossed that Renee comes back. I saw Renee is having some computer issues, and I feel so bad. We lost her for about half an hour there. Maybe she'll come back right in the nick of time at the end here. But if folks want to reach out to your guys' fund, do you have what's the best way to do that, so that people know the right process to follow? And if you have any final thought for the room, this is the opportunity to do it.
Yeah. So thanks, Andrew. This is really fun, and it would be remiss if I didn't make a joke about having a bot as an avatar running a room. So I had to do that once. Sorry. But you did a great job. This was really cool. To reach out to me, I'm actually putting my website and my email in the chat, so you can reach out to me there on LinkedIn. And I'm happy to take a look at whatever you send me. But in terms of thoughts, ultimately, if you have a really good business and you identify people who can write checks that are somehow affiliated with or interested in what you do, I think ultimately you'll have success. Tell as good a business story as you can. Tell as good a narrative as you can. And we sympathize with you because when we raise capital, we have the same challenges. We have to tell our story. We have to get people to write big checks. And we understand how hard it is. I'll tell you a very, very funny story. I was on a pitch call the other day with someone who was telling me about his company, and we were talking, and it was nice, and I liked the guy, but he was screen sharing, and his wife was texting him while he was screen sharing. So I kept seeing texts like, "How's the pitch going? Are you nervous? I hope it's going well." And it was such a human moment, right? Where you could see that he was very anxious about talking to me. And I'm like, I don't know. I don't think he should be nervous talking to me. It's easy to forget the human component and, that everybody has their hearts on the line. But it's also important to recognize that, it is tough to raise money. And that's part of being a founder and running a company. And you just have to put your armor on and do it to be successful. So I wish you all the best of luck. And hopefully some of us may be able to help you at some point in the future.
Yeah, no, thanks very much. And loved being on here, and I've especially loved the Roomkey platform as well. It's like I'm playing live action Sims, so fulfilling a lot of my teenage dreams with this one. But if you do want to contact me, I'm the only Davin Migrantawa in the world, so I'm very easy to find on LinkedIn. Shoot me a message on there, shoot me a deck if you've got one. I'd be happy to have a look. Think for any final thoughts. The one thing which I know Andrew's heard me say this before, so apologies if I am repeating myself, but really take the time to choose your VC. It shouldn't be the VC choosing just you. It shouldn't be a one-sided thing. It needs to be a two-sided thing. So really take the time to understand who the VC is. Don't just take the money from anyone, and really try and take the money that works for you with people who are fully aligned to your goals.
Awesome. And I think we've lost Renee due to computer. So Matthew.
So thanks again, Andrew, for having me on today. I really enjoyed it, and really enjoyed listening to other panelists as well. I think if you want to get in touch with me, and as I mentioned earlier, go through our website, look at some of the deals we've done, make sure it's a fit, and then reach out to me on LinkedIn and make it a concise note that explaining what you do and why you want to chat. And if it fits our thesis statement and it's an interesting opportunity, we'll reach out. We'll get back to you.
Awesome. And I want to give you all a round of applause, just because I appreciate you taking the time to give great advice and to give back to the community. I think we all greatly appreciate it, and being able to hear, straight from the people who are, doing the investing and helping the startups grow really helps to get that perspective from both sides. I think, from our side on stage as well as from the founder side. So thanks for giving the time to do that, and thanks for joining the third episode of the Venture Capital Show with Andrew Bott. And like Oren said, I am Andrew Bott in the metaverse. So this is the only bot that runs a weekly talk show. And I will see you all next Wednesday at the same time. Cheers, everybody.